I'm joined now by Steve Misener, CFA, one of Canada's most recognized figures in the institutional investment space. Steve, welcome back to the show.
Thanks, James. My pleasure.
Steve, we had some interesting comments in a conversation about the transaction whereby Canopy Growth is planning to acquire Acreage Holdings, and we more or less arrived at a similar conclusion, which is that at the end of the day, this is a win-win for both sides. My preference was to point out that this is why that I don't like to be involved with companies that have super voting structures, because I can guarantee you that Kevin Murphy, who exercised 83% of the votes, did not buy his shares at $25 a share like the IPO round holders. So how do you portray that as a win for shareholders of Acreage?
Well, Acreage needed to do something because the stock was down from the IPO price. I believe it was $25 last November. And given the liquidity issues, the weaker liquidity in the stock, and the fact that it was trading below its IPO price, it was going to be a less than favorable opportunity for them to raise more equity money at a down round, so to speak. So they needed to do something. They're building this massive footprint in the US. I believe at the time of their IPO in November, they were, I think, in 12 to 14 states. Now they're suggesting 20, where they have either operations or pending operations. They've always wanted to be a one-stop shopping, massive footprint in the US. That costs cash, lots of cash. I think they raised somewhere in the 320 million US at the time of the IPO. But when you have 20 little mouths in 20 states requiring capital, that's a fairly heavy burn.
Yeah. Acreage hasn't filed a financial statement since going public, and so we really don't know what their burn rate is at this point, do we?
We don't know. I'm not sure when it's due, but it's got to be imminent. Perhaps at the end of April it's due. Because of the IPO in November, I think they altered their year end perhaps to December. So that's pending for certain. But we know in these businesses on a generic basis and from observing the businesses that the build out costs money. And when you're going in a multi-state basis and you're making acquisitions and you're funding build-outs of cultivation and extraction facilities, we know that costs money.
Sure. The shares of Acreage have sold off somewhat dramatically. Stock's down 5% since they announced the deal, which suggests that shareholders are not uniformly pleased with the outcome at this point. Now, I'm trying to juxtapose that, and this is where I agree with you in that it is a win for the shareholders, is that the total dollar per share premium of the transaction when it is executed, meaning when cannabis goes federally legal in the United States, the full dollar amount is $36 a share, which represents a pretty serious premium to the VWAP closing price of, I think, what was it, $22.50 or something? So then, if the US were to legalize cannabis federally today, that would imply that Acreage shares are worth $36 to $38 a share. Clearly, the existing market is not pricing that premium in. Why is that?
Well, a number of factors. I mean, the issue of legalization in the U.S. is still a wild card for sure, because it has to go through Congress and Senate and other votes like that.
Couldn't Donald Trump just do it by executive decision?
I don't know, perhaps,
Okay.
but I'm sure it would get some blowback in Congress. But that said, when typically any kind of arrangement is made between public companies, it's usually a much shorter timeline. This is an unknown timeline, regardless of prognostications in certain politicians saying that they want to go ahead with it. There's nothing concrete in terms of a timeline or legislatively on the table, and it's a complicated, very, very complicated issue, as the states have more rights individually than they do in Canada as provinces. So it'll be a complex issue, and I think that unknown is what's offering in part the discount between what the potential is for Acreage shares when the deal gets consummated. In the meantime, arbitrageurs are trying to figure out what the appropriate discount should be between that future unknown down the road and today's price. And given that this is a kind of a spike in the shares even from the time of the announcement and liquidity was difficult previously on Acreage shares for Acreage shareholders, there's obviously been some sellers that taking an opportunity to sell into this arbitrage strength.
Sure. What kind of premium do you think should be priced into the shares of Acreage, considering that Acreage now has essentially Canopy as a banker, and Canopy, by extension, has Constellation as a banker? Who, so we've got Canopy, probably still with $4 billion on the balance sheet. You've got Constellation Brands, who's got arguably an unlimited access to capital. Shouldn't that count for something in the valuation of Acreage shares, even in the current unknown consummation of this transaction?
Well, it certainly assists, and I wouldn't use the term premium. What I would use is the discount from the maybe ultimate resolution or ultimate takeover. It's a discount rather than a premium. Yes, the fact that Acreage clearly, I think, needed money. They haven't issued a financial statement since the IPO, but they're obviously building a huge footprint, so they need money. The fact that the banking pass-through from, as you said, from Constellation to Canopy right through to Acreage is huge for Acreage, and they needed to get access to capital, and we know that getting banking and bank loans is still difficult in the U.S. in this particular space. So that's the real plus for Acreage, and for Acreage shareholders is this unknown discount to the deal price, but the arbitrage between the shares as people try to figure out what the deal risk is and how long this might take. So it's provided liquidity that the shareholders needed and the company needed in trading the stock, and it's provided critical capital to Acreage, and it looks like a big plus for Canopy as well.
Mm-hmm. Yeah. So combined entity basically is by far the largest footprint in the cannabis industry in North America.
Yeah, and perhaps, well, globally, really.
Right.
I mean, if you're a international fund manager and you want to own one cannabis stock and you're a really big fund manager, Canopy already was the go-to stock on the New York Stock Exchange, but as they have stated in many reviews of this deal, they didn't have the footprint in the US. And this is kind of on an as if and when come down the road basis that they will have this footprint, so people can say there's yet another reason to buy Canopy today as a kind of one-stop or the biggest player in the space, because they'll have front row seats when it does go legal in the States, which inevitably it probably will, as many commentators feel, and they'll have locked up this deal. Meanwhile, Acreage has the capital that's required pass through with this, banking opportunity, because that's really what it is. But Canopy doesn't own any equity in Acreage, which is critical to their current status.
Mm-hmm. Wow, Steve, great contribution as usual. We'll leave it there and come back to you soon. Thanks for joining me.
My pleasure, James.